Okay, today we are digging into the latest quarterly report from a company called Autagco. And look, I know financial reports can be a bit dry, but trust me, this one reads like a thriller. It's the story of a company right on the edge making a massive bet that could either be its saving grace or the final nail in the coffin.
So to really get what's happening with Autagco, you have to appreciate just how precarious their situation is. We're not talking about a little slump here. Things are so serious that the company's own auditors are basically waving a giant red flag.
If you read only one sentence from this entire report, this is it. This isn't just some standard legal jargon. It is a direct, crystal-clear warning from the auditors. When you see words like significant doubt and going concern in the same sentence, well, that's the financial equivalent of a 5-alarm fire. So what on earth does going concern actually mean? Alex, can you break that down for us?
I can. So think of it this way. In the world of accounting, going concern is the baseline assumption. It means everyone just presumes a company is healthy enough to stay in business for at least the next year. When an auditor raises a flag about it, they're stepping in and saying, hold on, we can't assume that anymore. They have very real doubts the company will even exist in 12 months. It is, without a doubt, one of the most serious warnings an auditor can give.
A huge red flag, for sure. Which brings us to the big question, right? What is going on financially that's so bad it would trigger an alarm bell like this? Well, let's dive in and look at the actual numbers.
All right, let's get into it. The story of why Autagco is in so much trouble is written all over their financial statements. And honestly, it's not a pretty picture.
First up, let's talk about profit, or, well, the lack of it. In the first quarter of last year, they lost about 291,000 Singapore dollars. Fast forward to this year, same quarter, and that loss has jumped to $437,000. That's a 50% increase in how much cash they're burning through. But believe it or not, that's not even the worst part.
Yeah, this number right here. This is the one that really tells the story. By the end of the quarter, Autagco had what's called a net capital deficiency of over $3 million. That's a very, very bad place to be. It essentially means the company is insolvent on paper.
Right. The easiest way to think about it is in your own personal life, right? It's like if you added up the value of your house, your car, everything you own, and then realized that number is less than what you owe on your mortgage and all your credit cards. You're completely underwater. That's Autagco right now, just on a much bigger scale. And this little table just wraps it all up. Revenue is dropping, losses are growing, and then there's that last line. Wow, just $30,000 in cash left in the bank. To put that in perspective, they paid their employees $278,000 this quarter. They literally don't have enough cash to make payroll for a single month. This is the brutal reality behind that going concern warning. So when you see financials like that, you'd think, okay, that's it, game over. But here's where the story takes a sharp turn. Faced with total collapse, Autagco is doing something incredibly risky. They're attempting a full-blown strategic pivot.
Yeah, they're not just tweaking things, they're walking away from their old business entirely. For years, Autagco was in the food and beverage space. You might know their brands like Superfoods Kitchen or the Green Bar. Well, all of that is being shut down. They are betting the entire company on a completely new industry, assisted living.
And they are moving at lightning speed. You can see on this timeline, they only bought the assets for this new venture less than a year ago. And since then, boom, boom, boom. They've just been systematically shutting down their old F&B outlets. By the end of 2025, the old business is completely off their books. It's a really decisive and incredibly risky move.
So is this crazy pivot actually making any money? Well, this is where it gets interesting. Even as it was being shut down, the old F&B business still made up most of the revenue. But look at that. The brand new assisted living business, from a dead start, is already pulling in almost 40% of their total revenue. This is the first little green shoot, a sign that maybe, just maybe, this wild plan could work.
And that brings us to the future. Autagco is betting everything on this new assisted living idea. So the question is it a smart bet? To figure that out, we have to look at the market they're jumping into. The logic here is actually pretty simple, but it's powerful. Singapore is getting older, fast. It's becoming what's known as a super-aging society, meaning there's a huge and growing number of people over 65. This demographic shift means there is an undeniable, growing demand for services like assisted living. Autagco is trying to plant itself right in the middle of this trend. And they're not just building regular old folks' homes either. They're trying to be a tech company.
They want to tap into the explosion of artificial intelligence in healthcare, which is a market that's projected to grow by almost 37% a year for the next decade. That's what a CAGR, or compound annual growth rate, of 36.8% means. It's an absolutely massive growth projection.
So their plan is ambitious, to say the least. We're talking about putting AI and even humanoid robots into their facilities. They're already lining up partnerships with real estate and medical tech companies to get the expertise they need. And they're not just thinking about Singapore. They want to expand across the region and bid on government projects. It's a huge vision, but a vision needs cash. Which brings us right back to that $30,000 in the bank. This is the million-dollar question, isn't it? Can they possibly survive long enough to pull this plan off? They have this huge vision, but almost no money. So, how are the lights still on?
The short answer is they're getting a lot of help from insiders. The company is basically being kept alive by loans from its main shareholder and another related company. And get this, the directors and top execs have agreed not to take their salaries for a while, to the tune of over $650,000. On one hand, that shows an incredible amount of belief from the people in charge. On the other, it shows just how dependent they are on that inner circle to even survive day to day. And this right here, this really sums up the whole story for an investor. On one side of the scale, you have these terrifying risks. They're basically out of cash, they're deep in the red, and they're trying to break into a brand new industry. But on the other side, you have these powerful lifelines. They're targeting a booming market. They have a tech-forward plan, and the insiders are clearly all in. It's the ultimate high-risk, high-reward scenario.
So, what do you make of it all? Is this a brilliant strategic pivot away from a failing business and into a market that's about to explode? Or is it just a last-ditch, desperate gamble from a company that was already going down? There's no easy answer, and that right there is what makes this such a fascinating story to watch.
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.